All right, so here we are into the second section of the chapter. The list of vocab words that I wouldn't necessarily expect you to know are right there. And it's my job to have you feel like you understand them by the end of the hour. So in your actual Cornell notes that you took, you might want to go highlight all of those because those are vocab words that go with this section that easily could be asked of you on the test. I'm going to explain what a journal is and the act of journalizing in the journal. You already know that third one, but a simple versus compound entry and what that means. The ledger is a new phrase for you. The act of posting takes something from the journal over to the ledger. And I will talk about what a chart of accounts is. So lots of little stuff. So what is a journal? It's considered the book, the original entry, and it's where the transactions are housed. So if you think back to what is accounting, I, R, and C, it's the idea of recording or bookkeeping. You should know that transactions are listed in chronological order. So they start at the beginning of the month, go to the end. They start at the beginning of the quarter, go to the end. Whatever kind of timeline you're looking at. And I can see that on a test. They're not in alphabetic order. They're not in numeric order. They're in chronological order. Of course, another word or set of words for that is they're in order by date. There's a 5-step process to this. Step 1 is to list the date. So you see, I can't remember if there's a number that's going to show up here. So there's the date. Do you have that in your notes? In my visual notes I gave you? Supplemental handouts, maybe? If so, we'd want to write it down. Yes, steps. Yes, okay, we're on that slide. Put these in. The steps to journalizing, just remember there's 5. You're going to first list the date, and notice what this says. It's called a general journal. Okay. Then you are going to debit, followed by a credit. So when I say debit account title and the amount, that's just which account is receiving a debit and for how much. And remember, always, 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 always do debit first. You might not know what the debit is, but you might know the credit. Then you'll backtrack and look for that debit. So you debit. In this case, cash is being debited for $10,000. If cash is being debited, is that an increase or decrease? Right. Does debit and increase always go together? No. Then you are going to credit a different account and a different amount. Excuse me, same amount. In this case, we are crediting capital for 10 grand. Is that considered a good thing? Yes. Number 4, I don't know if I love this one. When I learned accounting, I didn't learn it this way. When I've only seen this in the college level, collegiate level books. Number 4, they want a brief explanation of the transaction. So I always tell students just restate the transaction. As we get deeper into the book, they say you can omit explanations. So number 4, I don't know if I love it. You'll see me skip it often because I didn't learn accounting that way. Finally, number 5, you actually stop here and you technically go post, which you're going to learn what that means in a minute. But then number 5, they want you to, oh, I forgot number 4 down here. Number 5, they want you to come and put the account number in the reference column. This is going to make so much more sense when we actually are doing this tomorrow. But those are the 5 steps. We date, debit, credit, explain, and then we do the reference. chronological order, because if this is October 1st, how fancy is that? It's really October 1st in the real time. Then let's say on October 3rd we had another transaction, that'd be listed next, and then it's in a chronological by date. You already know this, but there's really two types of entries, a simple and a compound entry. A simple entry will impact two accounts with a debit and a credit. A compound entry will be three or more, 1 plus debit and or 1 plus credit. And here is what I mean. If we decide we want to buy equipment using cash, you'd see a debit to equipment, a credit to cash. Two accounts. That's what's called a simple entry. Notice I listed my debit first. A compound entry, as the example reads, we purchased equipment with some cash down and the remainder to be paid at a later date. So we would have equipment debited with some cash down. It would be a cash credit, the rest on an AP credit. So the difference here is how many accounts. Compound entries are 3 or more. You've known about that even since chapter 1. You just didn't know they had names, simple and compound entries. In either case, you always want to get that debited listed first, or number of debits listed first. Posting is a new idea to you. I think you understand this journalizing thing. Even though you haven't done it, you see it's there, okay? And I've been talking about it for a week. We haven't actually had the act of journalizing yet, but we've talked about it quite a bit. The idea of posting is transferring, or what I like to call moving what you did in the journal to the ledger. We're going to learn what a ledger is in a minute too. But posting is the idea of just taking out something from the general journal and shoving it over to its appropriate ledger account. A lot of times I draw a big arrow. We take it from the journal and teleport it over to whatever account it is in the ledger. And I'm going to put that in your notes a little bit more formally in a minute. What is a ledger? And do you have this in your little picture notes from me? Sweet. A ledger are all of the accounts, so the entire group of accounts that a company owns, all in one place. Because in the journal, they're scattered. They're organized by chronological order, and you might have cash, you might have capital, and you might have equipment, then you might have cash, then you might have equipment again, and then you might have AP. It's a jumbled mess. The act of moving or posting to the ledgers updates individual accounts. So you first have all the assets listed, then you have all the liabilities listed, then you have all the owner's equity. This is what you've been doing since chapter 1 also. It's just taking little bits and pieces. Like if you think of your backpacks or your lockers, okay? In those, and I don't know your organization, but I could assume, you go to class all day, but inside that backpack is a folder for first hour, a folder for second hour, a folder for third hour. Again, I don't know if you organize your stuff that way. And then all of your, college accounting for fifth hour goes in a folder. And all your 6th hour stuff goes in a folder. Think of those folders like ledger accounts, but jammed inside your backpack that you carry around. Similarly, the accounts in the ledger. Is this in your notes? It should be. Okay, love this. Finally, you see it all happening. You can tell this is the journal because it says the journal. And it's kind of a jumbled mess. On October 1st, something happened, and then on October 1st, something else happened. And then we had cash, and then Down on the 4th, we bought insurance with cash. And on the 5th, we bought supplies, but we charged it. This is a journal, organized chronologically. If I had to go see every time cash had an increase or decrease, I literally would have to go down, scan through, might miss one. Okay, cash was just like sprinkled confetti. So that's why we teleport or move anytime cash is debited or credited over to its ledger. So if we want to see, all right, tell me the cash story. I don't care about anything else. Tell me the cash story on October 1st, 2nd, 3rd, 4th, 20, 26, and then 31. That's the cash story. I could go look through this madness and probably would get tongue-tied and cross-eyed because I could sit and look, but that's the idea of, what's the word to move it from here to kick it to the ledger? What's the name of that? Post. That's why we take cash on the 1st, go tell its cash story. Again, if I'm like, oh, who cares about cash? I want to talk about supplies. Notice what all of these are. What are all of these? A couple liabilities. You're going to learn why unearned service revenue is a liability. And then we've got owner's equity. These are ledgers. The other one is a journal. You could argue that this one's the messy one, but there's sometimes a rhyme and reason why you want it chronologically listed. And then we post over the individual stories of all of the accounts. I like to use a quick analogy to what just happened on Friday. Okay? You all started your day. I'm going to make, I'm going to write journal and ledger. Oh, sorry. What's it called when we get one moved over to the other? Okay, good. Sorry. It's not host, it's post. On Friday, of course, we had a busy day. It was homecoming. By the end of the day, we all gathered in the gym. Could you arguably say that's mass chaos? Okay. Are all the juniors sitting with the juniors, or all the seniors sitting with the seniors? Eh, not really. You're all kind of jumbled up. Messy. Journal. You know, for us to see where every junior was, no, that wouldn't have worked. Now, Ekron, behind the microphone, if he said, hey, seniors, come down to the gym floor, all of a sudden you would have been pulled from all your directions, and then all of a sudden we've got all the 12th graders in one spot. And if he'd say, okay, juniors, you go in that other corner, then all of a sudden we've taken them out of this crazy mass and sent them to the respective corner. And I could keep going for each grade level. So anytime a 12th grader was debited or credited, for lack of better terms, I would post them over to their ledger, so at any point I could see just what the seniors were doing, or I could see just what the juniors were doing. All very important, all contribute to the dynamics of our school, but if I want to suction out or move or post, I could see each individual story happening. I know that seems kind of like a silly analogy, but the timeliness of it makes sense. Do you have this in your notes? Is this a journal or a ledger? You do know this yet. It says cash on top. It's a ledger. The journal would not be nearly as neat. The journal would have cash here and then down here and here and here and here, like literally like confetti sprinkled. Whereas this is one particular account in the ledger. What do we see happening here? We see the dates You'll later use the explanation. You won't use that here. There's a debit column, a credit column, and a balance column. What always goes with the star? That's normal balance. Am I going to put a plus or minus in front of debit? So anytime something happens in the debit column, I'm going to look above plus whatever was happening. So it started with a zero balance. If I have a debit, I look above plus 0 plus 25,000 is 25,000. Can you tell we paid cash on the June 2nd? So I look above 8,000 minus its balance equals 4,200 plus its balance equals 7,500 plus its balance. So there's left and right happening here, and then how does it affect the overall balance? This is basically a fancy T account, because I could make a little baby T and write the word cash here, and it's the same thing I taught you last week. This is just more technical. Are real accountants running around making T accounts? No, they're using ledgers that are just a fancy T account. The T account that made it. Okay? Here's what other real accountants are doing. They're probably not even, first of all, do you think this is computerized? Do you think they're doing this pen and paper, or are they doing it on the computer? They're very much doing it on this computer. They probably don't even type in the word cash. They put probably 101 in, and it instantly writes the word cash. It instantly does a debit or credit, and then there's probably a button that says post, and it automatically updates all the ledgers. I don't know why I've got exercises crossed off. I want to keep going. Looks like I'm going to review. Okay, this is where I wanted to see how far I was from this. Okay, I want to keep going. Now this looks ultra complicated. It's not. It's just little tiny baby versions of what I just showed you. So if there was a journal entry that said, owner invests $15,000 in the business. It's a debit to cash. So I'm going to date. I'm going to debit. I'm going to credit. I'm going to explain. Then I'm going to stop and go post. Which two accounts? I'm going to go find the cash ledger. And on that same date from journal page 1, I'm going to put that $15,000 debit. Then this credit, again, date, journal page 1, the $15,000 credit, updating both of the balances. But that fifth step, so date, debit, credit, explain. The fifth step is to come back with these numbers that are right here and go update. Let me just kick that out of the way. We're going to go update the ledger. Sorry. I said the wrong word. We're going to go update the journal. See these arrows? The arrows seem kind of confusing, but we're going to stop, go update those. We're going to post, and then we're going to come back and say which account numbers they belong to. Speaking of account numbers, I want to bump ahead to that, and then we can review. What are account numbers? There's just a number attached to the account. Account numbers are arranged in a sequence in which they're presented on the financial statements. For the first time, you're seeing, why is my computer being so fussy? For the first time, you're seeing a number attached to every account we've learned about. So for example, we've always learned about cash and AR and supplies. There's a few new ones in there. But we're also learning there's account numbers attached to all of them. 101, 112, 126, 130. There's numbers. I don't like their numbering system one bit. It's not very organized, I don't think. But assets typically are in the 100s. If it's a really big business, they'll have 1,000s. And it's just putting a number with an account. Liabilities are typically 200s. Owner's equity are typically 300s. And for the first time, they branch off and have revenues, a number, and expenses. I don't know why they jumped ahead to 600 and 700, but weird. Typically, they're separated by 10 numbers. So you'll see cash. Here's how I would have done this. I would have had cash be 100, AR be 110, supplies be 120, prepaid insurance 130, equipment 140, and then accumulated depreciation, which we'll learn about at another time. So separated by 100s. That way, if you come in here and decide you're going to add an account, you could, like, so if I decide, all right, I am going to have a computer account, technology account. So then I'd come in here later and say, you know, the technology account, my computers, my printers, all that kind of stuff. What number do you think I'd assign if I had it smack in the middle? 125. So I don't know, these are weird. I don't know why they did these this way, okay? I'm just telling you, typically businesses go in increments of 5s or 10s, so there's room in between to add accounts. What's the order of the accounts? I don't know how much the book explains this. Typically, assets are in order of liquidity, meaning how fast can they be cash. So the idea of liquidity is how fast could I turn these computers into cash. That's why AR is listed second, because if you really wanted to, couldn't you go beat down the door of that AR and say, hey, pay me. How fast can we turn this asset into cash? Equipment tends to lose value pretty quickly. That's why it's listed toward the bottom. When you hear of a business having a liquidation sale, what are they doing? They're selling other stuff, like Herberger's, for example. They were selling, you name it, every fixture, every mannequin. They're trying to just liquidate those assets because a mannequin is not cash. What can we do to get that mannequin to be cash? Well, we're going to sell it. So the order of liquidity means how fast can it get to cash, and that's why cash is very liquid. It's already cash. Liabilities, I see two ways. I can see them be alphabetized or in numeric order based on their balance, typical balances. These owner's capital tends to be in this order, and again, I'd probably do 300, 310, 320. Expenses, the same over here. They tend to either be in alpha order or in numeric order based on their balances. Here's another example of, I just pulled this from I think it's from the internet even. Can we find where the assets quit? What's the last asset on this list? Now these are really tight, 101, 102, 103, 104, 105. They have quite a few liabilities. They have the owner's equity, 1 revenue, and a few expenses. That one? I like the layout of this better because of the 1, 2, 3, 4, 5s. I just think they're pretty tight. I'd rather see 100, 110, 120, 130, 140, 150. The reason I need to talk about this, though, because if I go way back, sorry, this is probably kind of glitchy. Like notice here, cash is 101. Or if I show you this, my recording's covering it, but even if I look at the supplies on the 5th, I date it, debit, credit, explain. Then I'd go over and find supplies on the 5th, list my debit. What am I going to do with this 126? Put it back as step number 5 in the reference. Again, if this was computerized, it would all be done for you. But it's not. Welcome to the very fundamental accounting class. We're going to do it all by hand. Can you tell there's going to be a lot of paper and page flopping when I teach this to you? Because you're going to have a journal, and you're going to have a ledger with all those accounts, and you have to talk to each of them every time you post something. It's also a points hog on the test. Because if you look look at all these things, that's all handwritten in. If I go back, that's all handwritten in. The 5 steps and posting to the ledgers, all points on the test. You want to just remind yourself of all of these? Should we review this? Should we review this quick? Oh yeah, I don't know if we'll need Wednesday. I guess I was correct in my planning. Let's take a quick review. Debit and credit do not equal plus and minus. It depends on what side of the T they're on. Debit, balance accounts, so where the star is. Credit, balance accounts, where the star is. If the star is there, that's meaning the increase side. What accounts have debit balances? All assets. And drawing. And all expenses. Do not think of these 2 naughty accounts as assets. Rather, they don't follow credit rules and make credit balances go down. They look like assets. It's just that put them under the credit, but flip them because they don't play nice. How about credit balances? All what? What's the key word with liabilities typically? Payables. You'll learn later on that it's more than just that. Can I say all owner's equity? No. Capital, and what other one? Revenue. Now, you know, we could put numbers with all these. What do assets tend to be? 100s. We'll come back to these 2. Liabilities tend to be, what if the business was huge? 2000s maybe, okay? Capital tends to be a 300. Drawing is also in there. Revenue tends to be a 400. Expenses tend to be 500s. That is basically what I taught you all of last week and now today. Let's review this. You journalize in chronological order. I always just write chrono. Chronological order. It looks like organized chaos or an organized mess. Because there's accounts sprinkled all over. Sometimes they're debited, sometimes they're credited. You'll see cash, 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 cash with debits and credits because that means money's coming in and money's going out. There are 5 steps with a pause. Let's hear them again. When we journalize, what's the first step? Date. Then what? Debit in the amount. Credit in the amount. This book wants us to stop and explain. I like to say, pause, and go post. Every transaction, there's going to be something debited and something credited in the general ledger. Each account, each account, each account, each account. Maybe this is 100, this is 110, this is 200, this is 300, this is 400, and 500. So we pause, we go post, and then we come back for the fifth step, and it's that post reference column. Chaos, individual stories. Try to answer this question. What's the answer? D. Here's why it's not A. We journalize and then post. Journalize, post to the ledger. JPL, journalize, post to the ledger. It's transferring ledger transaction to the journal? No. It's transferring, look, gotta flip them, journal transactions to the ledger. It's not optional, it's required. Hence the answer. Real accountants probably have a button that says post. Boom, all those accounts update. Oh, here is me saying, oh, instead of writing, it looks like I would have done this instead, sorry. 100, 110, 120, it's so much cleaner, so much cleaner. Now, in your part-time jobs, if you have a hand in the financial stuff at all, I would encourage you to ask your boss if they're willing to share this information. Hey, can I see your chart of accounts? They're going to go, you know what that is? Or ask them to, well, I don't know if they'll show you the ledger, but that shows how much cash they have, how much assets how much they own in assets. I mean, just ask them to see the chart of accounts, see if they'll share that with you. Do any of you work in a financial, Kenzie, you said you, what's that? Yeah, sure is, yeah. Ask him next time you're there. Even ask your dad. You know, or if your family is a farm family, ask to see their chart of accounts. Maybe they have one, maybe they don't. Makes it a lot easier if they do. So, I think I'd rather just do this with you than like show you all of this. What I think what I'm going to do is I'm going to stop my recording, so that's just lecture. And I just want to review what we've got for EOC. If we can get it done tomorrow, then we'll maybe stop there. We'll see though. We still have a good 15 minutes though. So I'm going to stop this. Then we're going to try doing some of this. Or if it just works to do it tomorrow, we'll try that. Give me just a minute.